This was driven primarily by the rising cost of energy. Let's bring in Bullseye American Ingenuity Fund portfolio manager Adam Johnson. And within this report, it was all about gasoline.
Yes.
And that was the expectation.
Yeah. Well, the core, which excludes food and energy, was 2.6%. I think we can live with 2.6. I mean, I can live with 2.6% as a portfolio manager, because at that point, there still is the possibility of Fed rate cuts. And of course, when the Fed cuts rates, that makes stocks worth more today because future earnings are worth more.
Now, at this point, it doesn't look like traders are really betting on, I think I've saw a 30% chance maybe of a rate cut. But the dynamic changes with Kevin Warsh coming in.
That's right. And in fact, what's really amazing, Cheryl, is that 2 to 3 months ago, before bombs started flying in the Middle East, the Fed Fund futures were effectively predicting there would be 2 rate cuts. And then, of course, missiles started to fly, and that went to 0, no rate cuts. And then we actually started to see rate hikes being priced in, simply because the Fed would have to try to rein money in, because inflation was, in theory, going to get so much higher with higher oil prices. And yet, you know, a funny thing has happened in all this, Cheryl. Oil has been 100, 105, et cetera. I mean, yes, that is elevated, but it's actually less than the previous spikes that we saw in 2008, when it first looked like Israel and Iran were going to go after one another. Oil went to about 150. And then when Russia invaded Ukraine, oil went to about 140. Well, here we are down around 100. So I think the market has learned over time that price spikes generally don't last very long. And I think that's why, while stocks took a 10% haircut initially, they're starting to come back.
Yeah, no, and you saw that in the action that we saw throughout the week with the positive tone and the breadth of markets. You know, the Wall Street Journal had a piece out called "Why Gulf Nations Would Bear the Brunt of Hormuz Tolls," as of course we're now hearing that they are charging $1 per barrel, or up to $2 million.
Isn't it amazing? In
ship.
International waters.
Yes, which, by the way, it violates international law.
That's
but one of the things the Journal says is economists think the region's oil-producing countries may have little choice but to absorb this possible Iranian toll in the long term.
Yeah,
this could be going on for a while.
I hate to see this, and yet we need that oil. And one way or another, and again, the market is figuring this out, one way or another, that oil is going to flow. Hopefully, not with any restrictions. Hopefully, not with a toll. Hopefully, not because the Iranians are determining the flow, but because the free market is determining the flow. But absent that, if there is some sort of Iranian involvement, at least the oil is getting out. And at least if the oil is getting out, that means it's no longer $100 a barrel, it's 90, and then 80, and then 70, and we have normalization. I think President Trump is keenly aware that he is on a time clock, because if you have still elevated gasoline prices by the summer driving season, all of a sudden people are paying a lot as they're trying to do their trips, and they're saying, wait a minute, midterms happen in November, and then he's got a real problem. So I think that's really the issue.
Well, and here's the thing, is the question mark for the American consumer right now is when are gas prices going to go down? And that's a very hard thing to determine at this moment, especially because we're going into the summer driving season.
Right.
And the blend is changing, and demand is going to be higher for gasoline. So it doesn't look like pump prices are going to be.
Well, that's why I say President Trump is on a very specific time schedule. He needs to get this done, and that is why Vice President Vance and the team in Pakistan over the weekend, we'll see what comes of it.
Yeah. Also, the other question I had for you was, Kevin Hassett joined Maria on Thursday, and he said that he was he's confident in 4 to 5% growth in this country over the year. What do you make of that? It's a very bullish.
Oh, this economy is, I know, this economy is so much stronger than people give it credit for, Cheryl. From GDP growth, and I think he's right, the Atlanta Fed GDP Now forecast supports what Mr. Hassett is saying, that it's somewhere around 3.5 to 5.5. That's a pretty wide range, but that's a strong range, given the fact that the 25-year average for GDP is about 2.8%. So we're above average. We created approximately 175,000 jobs last month. And most importantly, for me as a portfolio manager, as I look to the earnings season that really starts numbers next week in earnest. I think it's going to be a sixth consecutive quarter of double-digit earnings gains. We haven't seen that since 2021, 22, coming out of COVID, the surge, and most importantly, record profit margins. And I think that's the early payoff on AI. So if we have GDP growth, we have job growth, and we have earnings growth, that's a very strong backdrop, again, for me as a portfolio manager to deploy capital on behalf of my clients and look to the future. Not what's happening or has been happening in Iran, but instead looking to the future and the strength of the economy.
You're right. And the banks start. Yeah,
they kick it off next week.
Kicking it off. All right. Adam Johnson, thank you for being here.
Oh, thanks for having me, Cheryl.